in New York yesterday.
Exactly that. It's another record high for the S&P 500, which already for the first half of 2024 met more than 30 different record highs. So far, we're only past 2 trading days into the second half of the year, and it seems that form from the first half of 2024 is set to continue. We can still ask some questions, though, over how justifiable this rally is, because we did have comments from the head of the US Central Bank, Jerome Powell, where he did indicate that actually inflation has not made enough progress towards coming down in order for the US Central Bank to start cutting interest rates, something that the likes of the Swiss National Bank, the European Central Bank, and in a couple of months from now, the Bank of England are expected to do. Now, headed into this year, we were expecting multiple interest rate cuts from the US Central Bank. As we are now in the third day of trading of July, we still have not got one interest rate cut, and we still have a lot of uncertainty over when the Fed will actually cut interest rates. And that's why some are questioning whether this is a balloon that might be popped at some point. I don't think it's going to be quite that dramatic, but I do think at some point we might have a correction over the coming months.
All right, and investors are also keeping an eye on the elections in the UK that's coming up Thursday. How are they reacting?
Yes, all eyes are not only on France, we also have the elections coming up in the United Kingdom due for tomorrow. Generally speaking, the market is expecting for the Labour Party to become the new government. We should get that news towards the end of this week. But of course, we never say never to anything in international finance. Generally speaking, when you're looking at the British pound and UK assets, we can expect to have a little bit of sensitivity over the remainder of this trading week. Generally speaking, it always and also feeds into the narrative as to whether a potential change of government might change the time frame for when the UK Central Bank, the Bank of England, might start cutting UK interest rates. Because we don't expect that much political uncertainty, I do not think that the time frame for the UK Central Bank to start cutting interest rates, which could be approximately in August, will shift that dramatically. But that might be something of a risk for financial markets that we need to consider.
All right, and tell us about the other key economic data that you're keeping an eye on today.
So today we're looking at the private payrolls that are coming out from the United States. That's the ADP employment report. That should provide some sort of catalyst towards what we can expect from the monthly employment report that comes out from the United States on Friday. That's the non-farm payrolls. Generally speaking, we're expecting to see some small softness in the employment data over the second half of 2024, which might encourage the US Central Bank, again, the Federal Reserve, to be more spoken about when the US Central Bank might start cutting interest rates. Again, the biggest factor now is inflation, but when it comes to key economic data, we cannot underprice the risk of employment reports such as the non-farm payroll and the other data we get from the US every month.
Okay, Jameel Ahmad from GTC Group, thank you very much for that insight.